Everyone, I welcome you all to Indian Bank's post results conference call for fourth quarter of financial year 2025, hosted by Emkay Global Financial Services. From the top management, we have with us Shri Binod Kumar ji, MD and CEO, and we have executive directors, including Shri Mahesh Kumar Bajaj ji, Shri Ashutosh Chaudhary ji, Shri Shiv Bajrang Singh ji, and Shri Brajesh Kumar Singh ji. I request the MD sir first to briefly summarize the key highlights from fourth quarter FY 2025 results and also provide us some strategic direction on growth, margins, and asset quality. Post which we will have the Q&A session. Over to you, MD sir.
Thank you, Anand. And good evening to all the friends from investors community, my colleague on the board, all the executive directors. First of all, I will say this quarterly results has been good. Annually also, annual results has also been good. We have crossed figure of 13 lakh crore for the first time. Also, PAT has crossed. We have crossed 10,000 for the first time. To be precise, it is 10,918. So that is the first time we have crossed. And also one good number I will like to at the outset I will share with all of you. Our SMA book, including 012, which was 15.59% at the end of the financial year March 24, has come down to 8.06% for the financial year FY20 at the financial year 25. Having said that, so total business reached 13.25 trillion. Q growth has been good. Annually, we have added around 1,03,000 crore. Out of that, accretion in the Q4 was approximately 60,000 crore. Deposit also, overall growth, we reached 7.37 trillion. Out of that, QOQ growth is 4.97, annual growth is 7.14. Current account also, we reached 40,000 crore. So QOQ growth is 11.33% and YOY growth is subdued at almost flat at 1.63%. Similarly, in saving fund, we reached 2.43 with a QOQ growth of 4.15 and YOY growth of it is flat at 0.84%. We have been able to maintain CASA at 40.17%. And one good thing in retail term deposit, less than 3 crore, we have been able to reach at 2.79% with a growth of YOY growth of 10%. Similarly, in advances, we have achieved 5.88 trillion with a QOQ growth of 5.18% and YOY growth of 10.19%. RAM sector, we reached 3.51 lakh crore or trillion. QOQ growth is 4.82% and YOY growth is 13.22%. Retail, we reached 1.19 trillion with a QOQ growth of 3.60% and YOY growth of 13.71%. Agri, we reached 1.38 lakh trillion with a QOQ growth of 6% and YOY growth of 13.68%. MSME, which used to be in the range of growth, used to be in the range of 5 to 6%. This year, we have been able to achieve growth of 11.9, approximately 12% in the MSME. RAM share is flat around at 64.23%. Net profit for the quarter it is 2,956 and for whole financial year it is 10,918 with YOY growth of 35.41%. Operating profit is at 5,019 with a QOQ growth of 5.69% and YOY annual operating profit is 18,998 with a YOY growth of 12.82%.
Right.
Because other income, NII QOQ sequentially it came down marginally because of the impact of the 2 repo cuts. But annually for the YOY it has grown by 8.17%. Similarly, other income we have seen good sequentially. We have seen good growth and with of 27.46%. And YOY growth is 17.24% annual. Return on equity, it slightly came down from 1.39 to sequentially 1.39 to 1.37. However, for annually, if I talk of annual, it has grown from 1.07 to 1.32. That is 25 basis point increase. Return on equity, almost it is flat. 21 was the Q3 sequentially, and now it is 21.01. And for full year, it is 20.76. Cost to income ratio, it is flat at around 45%. December it was 44.56, and for annual it is 44.77. So it is almost flat. Then provision coverage ratio, sequentially 1 basis point improvement is there, 98.09. It has gone up to 98.10. Then credit cost, if we talk of the credit cost, it has gone a little, sequentially it has gone up from 0.47 to 0.81. But for annual, it has come down from 7.77 to 0.66. Credit cost has gone on because we have some MOC was there and some slippages. But the major impact is because of the one account in NFB. We made a provision in NFB also to be on conservative side, safer side. Gross NPA has sequentially come down from 3.26 to 3.09, and net NPA from 0.21 to 0.19. It has come down. Slippage ratio sequentially it has increased, as I told you on account of the some MOC. 0.78 to 1.09, it has come down. It has gone up, but annually from it has come down from 1.49 to 1.11. Slippage, absolute slippage for the quarter was not 1,393 crore. December it was 1,004. So little increase because of the some MOC branches were under audit. SMA, as I told you, SMA has come down from 79,931 in the March to 45,923. So there is substantial reduction in SMA book, and SMA 2 book also more than 5 crore is only 659 crore, and more than 25 crore only one account of 160 crore, and there also we have made 100% provision. We have been able to open around 55 lakh account during the financial year, a saving fund account, and current account around 1.58 lakh current account we have been able to open. One good thing I'm happy to share, our average balance in new account, which was 21,000 in the Q4 last year, has gone up to 30,000. So that is one good aspect of that. Guidance, if I talk of the guidance, deposit guidance we are giving 8 to 10%, advance guidance we are giving 10 to 12%, CASA we are giving guidance of maintaining around 40%, then LDR in the approximately 80% range, gross NPA 3.09 already there, so we are giving guidance of less than 3%. Net NPA we will be able to maintain because already we have reached at 0.19, so we will maintain that. Recovery also we are giving guidance of 5,500 to 6,500. Then NIM, because 2 rate cut is already there, we have some moderation on yield on advances also, and NIM also. Sequentially, it has come down by domestic 9 basis point, and we also see since inflation is within comfortable range, we see there may be some few more rate cuts, so we are revising NIM guidance from in the range of 3.15 to 3.30. And ROA we are giving, although we have achieved 1.32. But because of the increased asset or some moderation in the profitability, we are giving guidance of in the range of 1.20. Cost to income ratio we will be able to maintain around 45%. Credit cost I am giving guidance of less than 1. Slippage also we are giving guidance of less than 1. One good thing I will like to share for recovery. Recovery is continuously more than the slippage since FY-22-23. This year also recovery was 7,651 and slippage was 5,683. And I'm happy to share this amount of recovery we have been able to achieve despite very subdued recovery contribution of NCLT and NARCL. If I give you further bifurcation, out of this 7,651, recovery in less than 1 crore is 6,730. So contributed by the basically smaller accounts. If I talk of the capital, capital we are well capitalized at 17.94%. Out of that CET1 is 15.36%. Digital, my colleague Mr. Bajaj will explain, but before that I will like to only add one or two things. Digital adoption is our focus area. We have made so many investment during the last 2 to 3 years. Benefit of that is yet to come. So that's our focus will be on digital adoption using customer base of the mobile banking, internet banking also. And on HR, we have already initiated, bank has already initiated capacity building for leadership development program. Rising Star we have initiated, but capacity building for that was for the top management group, AGM and above. We are also making efforts or capacity building for the middle management in a specific area of credit and forex. So intensive training for 6 months, 17 weeks. In credit, we are starting a program, and similar program will be also initiated for the forex. And customer service will be a focus area, and business sourcing. We are also thinking of the business sourcing, how to increase the business sourcing. So that's why RSC, Resource Acquisition Center 100 is already there. We may increase that number to 121. RNGR, Resource and Government Relationship. So that is 18 centers are there. We will increase that to 21. And also our subsidiary, IGSS, we use that subsidiary for garnering business in all segments, like current account also, MSME also, retail also. So I will use that for garnering the business. Now I will request my colleague to explain about the initiative taken in the digital side during the year.
Thank you, sir. Good evening, everyone. The digital migration continues this financial year. If we take the entire year, FY25, the digital transaction have gone up from 87 to 92. If we take only this quarter, it has gone up from 89 to 93%. So presently, March 25 quarter, the digital transactions are 93%. Even on the UPI also, which used to be 1.56 crore per day transaction in March 24, now it is per day 2.67 crore. On mobile banking also, per month 55 lakh per month transaction have gone up. Then on the mobile banking, our customer base has gone up by 16% from 1.67 crore to 1.94 crore. Same way, transactions also have gone up by 3%. On UPI, our customer base has gone up from 1.75 crore to 2.18 crore, which is growth of 25%. Same way, the transactions also, remitter plus beneficiary, has gone up by 51%. It used to be 570 crore per year, and now it is 862 crore. Internet banking also, our customer base has gone up from 1.06 crore to 1.15 crore, which is 8% plus. Same way on the credit card user also, from 2 lakh to it is 2.78 lakhs. Same way, the POS transaction also from 1.14 crore to 1.28 crore, which is a growth of 13%. The digital journey, now we have added another 43 journeys, which is now 121 journeys. We did business of 1,67,390 crore, and the last year it was 81,000 crore, which is a YOY growth of 106%. As far as the adoption is concerned, the MSME business is 83%, retail 85%, agriculture 95%. And even on the liability side also, the deposit, which used to be 10,759 crore last year, this year it has gone up by 174%, which is close to 29,439 crore. Total overall business, through digital, it is 2,54,000 crore. When we started our journey in April 22 with our first launch of PAPL, first year of our business, we did business of 5,640 crore, and then March 24 it was 81,250 crore, and March 25 it is 1,67,000, and we are projecting 2,25,000 crore for the financial year 2026. As far as the digital migration is concerned, the number of accounts have gone up by 133%. It is 1.2 crore accounts open under a digital platform. Digital liability business gone up 3x, growth is 3x. Same way in digital home loan also growth is 3x YOY. Digital vehicle loan growth is 4x YOY. Digital agri loan growth is 2x, which is 42,064 crore. In digital MSME also there is an adoption and the growth is 2x, which is 7,355 crore. We have now focused on the digital retail jewel loan also, where the growth was 6x. And same way the SHG loan also, which was 5x growth, we did 2,244 digital SHG loans. Last year we launched 43 digital journey, and this year we are proposing to launch another 37 journeys. With that, probably we'll be covering each and every product of the liability as well as asset side. Our app InSmart, which was launched in June 24, which is an omni-channel app, we have 280 functionalities and another 30 plus feature will be added during the current financial year. Apart from that, the already 77 lakh customers are onboarded on this new app. We launched the corporate mobile banking on the omni-channel platform recently, and in March 25, 2,200 customers already they have onboarded. As far as the fintech partnership concerned, we used to have last year it was 130, more than 130. Now it is 167 fintech partners. We provide all the fintech solution to the institution or the government department, maybe the SNA or the cess collection or the municipal corporation taxes, FASTag, e-rupee, CBDC, hospital solution, coaching, college solution, and mobile app for the apartment society, for the business on the CASA side. And upcoming projects, I would like to tell the analysts that we are coming up with a new gen call center, which will be shortly launched. InSmart business app for the MSME, for the MSME customer. CMS is again our ongoing project. RBI innovation of the ULI, the Unified Lending Interface. We have now various APIs, and we did the business close to 5,000 crore with the API by using the API of RBIH. For our relationship manager, which MD Saab was talking about, resource acquisition centers. So for them, for the employees, we are already giving them the app, which is InConnect app. For the capacity building MD Saab was talking about, and where the knowledge gap is there, for that, by using generative AI, we are coming up. We have already launched the employee assistant in the CUG group, but in the June it will be launching that app also for the employees. CRM solution, we have already onboarded a new vendor for the next generation CRM solution. On the data analytic model also, we have created new models on the SaaS platform. Cloud migration, we have completed, and still it is where the new apps are coming, new things are coming, we are putting on our own private cloud, and we are going to the microservices instead of the monolithic platform. By using generative AI, we have a couple of more the use cases. One is with the RBI Innovation Hub, the automated grievance redressal system, then chatbot solution for other things. We are planning to come with our own the UPI app apart from the mobile app. Same way the data lake also, we have gone for the data lake. The new RFP is floated. Corporate credit also, though it's a tough journey, but we are close to the various models on the corporate credit also on the digital journey side. And by using agentic AI also, we are working on a couple of use cases. Maybe by the end of this year, we'll have some use cases on agentic AI also. Thank you so much.
Thank you, sir. We will now open up the floor for Q&A session. Anybody who wishes to ask a question shall raise their hand. I request the participants to limit their questions to 2 per participants, and for further questions, you can fall back into the queue. Before we assemble a question queue, so my first question is that there is a account where the Supreme Court judgment has come, which is very adverse judgment. Number one, what is the exposure that the bank has to that account, and whether the bank will have to refund back that money to the bidder, number one, and I mean whether there is that kind of a covenant which is there in the agreement, and secondly, what could be the impact of this kind of judgment on the other resolutions which are there in the pipeline?
So very rightly, this is a judgment, and we have received a copy of judgment only on very recently, and of course it is I will say landmark judgment, and how it will impact only time will tell. But one thing I can tell you, if at all we have to reverse, I think it will be good for the bank, because if you see, we have got our resolution at the 40%. That means 60% haircut was there. Now that asset is up and running, so enterprise value must have gone up. So if at all it happens, of course there will be some legal battle. But net, my personal view is it should be positive, net. But let us see how other party, they may also prefer for appeal, etc. And so let us wait and watch, I will say.
Sure. And any impact that you see on the other resolutions also? Any other resolutions where the this kind of judgment actually could come through, or do you expect that?
I don't think psychologically there may be some impact for resolution applicants, because it has come after substantial gap of 3 to 4 years. So psychologically, yes, there may be some impact. But at the same time, if you see the asset they are getting at the haircut, so that factor is also there.
Certainly, sir. And sir, is it possible for you to share like what kind of consideration that we had received at that point of time?
40% we told you, our outstanding was 2,600 and we got around 1,200.
Okay.
1,250.
So that is the amount which we need to reverse earlier first, and then basically after that, as and when the new bids come in, we can again book higher gains.
Yeah. So if they don't prefer appeal, if they go for appeal, then immediate reversal may not be required.
Okay, got it, sir. Sure. Any participant, if you have a question, you can please use the raise hand option and ask a question. Yes, Samir, you can unmute yourself and ask a question. Samir, we say please unmute yourself.
Hello.
Yeah, Samir, go ahead.
Yeah, hi. Thank you for the opportunity. Sir, my question is more on growth. We have seen systemic growth coming down. How does one look at growth for next year for the bank? And secondly, if you could comment on the slippages as well as credit cost outlook. I'm not sure if you kind of already guided. I missed earlier part of your commentary. Thank you.
So see, growth we have given very conservative guidance of deposit of between 8 to 10%, advance 10 to 12%. And we believe we will achieve this because if you see our last quarter growth, it has been good in almost all the parameters. Total business grew by 5%, deposit also grew by almost 5%, advance was also grew by 5% in the Q4. That's why we are giving guidance of in the range of 8 to 10% and 10 to 12%. We could have achieved even this year, but for conscious call we have taken because we raised some other deposit, some fund from other sources like infrastructure bond. We also getting at competitive rate some refinance we are getting. So credit demand was met by these sources. That's why deposit we did not go for the growth. Because wholesale deposit, we ended at flat, 1.04 lakh crore to 1.06 lakh crore. So almost flat. We didn't go for the wholesale deposit. Similarly, on advance, we shaded some around 10 to 12,000 crores of the low yielding advances. So because of that, we just missed that, and we will be able to achieve that. Credit cost, I'm giving guidance of less than 1. 0.66 annual is there, but we are giving guidance of less than 1, and I'm confident that we will achieve this. Slippage also for annual it was 1.11, and for Q4 it was 1.09, and I'm giving guidance of less than 1% of slippages, and I'm pretty confident we will achieve this.
Okay, sir. Thank you. Just finally on recoveries, any meaningful accounts which are still pending or some chunky recoveries that you look at for FY26?
See, if you see recovery even for this year, recovery through NCLT was only 486, and through NARCL it was 621. Last year against 1,400 for the FY24. So even without the support of these channels, we have been able to recover achieve the guidance 7,651. And as I told you, recovery in the lower segment was high, less than 1 crore, it was 6,730. So our reliance on the smaller accounts is more for the recovery. Whatever
Yes, sir,
NCLT also.
Sorry to interrupt, but the question is more pertaining to the fact that last couple of years or 3 years, recovery has also been led by the strong economic environment that we've had. Given the moderation that we are seeing last, say, 12 months and probably likely to persist in F26 also, what will drive recovery? That is how I was. That is where I was coming from. Yeah.
So recovery, we will our reliance on big accounts are not that much. Only smaller accounts and through OTS, various channels are there. OTS is there, then Surface is there, and Surface is there, Lok Adalat is there. And here we go for, if you go for auction in the under Surface, without taking physical position, chances of materializing is low. So here we are making very conscious efforts for getting the physical position, and account wise we are monitoring that CMM application has been lodged or not, and what is the status of the physical position. Because if we have physical position, our recovery number will go up. We will be able to sell the property also. So through these modes, I am confident that whatever guidance we have given, 5,500 to 6,500, we will be able to achieve.
Okay, sir. Thank you so much and all the best.
Thank you.
Thank you, Samit. Next, we'll have a question from Mohit Jain. Mohit, please unmute yourself.
Hello. Can you hear me, sir?
Yes, Mohit, I can hear you.
Yeah. Hi. Good evening, sir. So my question is on the SME. Last time when we had the investor call after the results, you said our SME exposure has come down to 3,000 crores from 7,500 crores that we reported in Q3. From that context, if I'm seeing right now, it is back to 5,000 crores. Any comments you want to make on this, sir?
SMA,
SMA,
two big accounts are there.
Okay.
They have come in SMA 1.
Government guaranteed.
Because of that only.
Yeah, and so what is the status like as on date? Is it still in SMA or is it moved to SMA 2? How do we look at that?
No, it is in SMA 1. But we don't expect that amount will in any way slip to NPA.
Okay.
Yeah.
And so one follow-up on the loan guidance. This year you're guiding for 10 to 12. Last year the guidance was 11 to 13, and when in Q3 call I think we specifically discussed whether we can achieve the guidance. You were positive, but we somehow ended missing on this guidance. So wanted to understand. Obviously, we did some shedding of the low yielding deposit advances. Apart from that, sir, what was the possible reason in which we missed the guidance, and how optimistic and strong you are about achieving the guidance for the current year of 10 to 12% that you are giving, sir?
If you see, Mohit, our last quarter growth, it was approximately 5%. So we tried to cover the lost ground, but somehow just missed that. Around 10% we achieved against guidance of 11%. So it was question of only 5,000 crore. And let me tell you, I have some opportunity of around 5 to 6,000, but price was so competitive, I didn't go for that. So that was the main reason. And I am confident that 10 to 12% guidance we will achieve this time.
And then just if you can also guide us to what kind of a growth you are expecting in the corporate segment, because I think that is a place where generally we are seeing across the banks the growth is pretty low. So in the 10 to 12%, if you can just provide some sort of a color as to how much growth are we expecting in the corporate sector, sir?
Corporate, we have kept a target of around 9% growth.
Okay.
Yeah.
Okay. Thank you, sir. Thanks.
Thank you, Mohit. Next question we'll take from Sushil. Sushil, please unmute yourself.
Congratulations to team Indian Bank for doing an excellent job and a stable result. So my first question is, what is the outlook on treasury with falling interest rate scenario and low inflation, and the interest outlook on your global international division too? And if treasury gains are high, how are you going to reposition in the market where treasury operations are concerned?
Okay, so interest outlook, thank you, Sushilji. Interest outlook, already we have seen 2 rate cuts, and inflation number is within the comfortable range of RBI, that is less than 4%. So I expect and hopefully this trend of inflation will continue. So we are expecting further rate cuts going forward, maybe 2 to 3. Coming to the treasury gain CS, we will book profit as per only requirement. We will not go for, because we will go for the booking the entire profit. We will pace it as per our requirement. Globally also, our international exposure also, interest rate, yes, so far has also started coming down. So there will be some impact on overseas book also on the NIM side. That's why if you see, I have revised my NIM guidance in the range of 3.15 to 3.30.
Sir, in keeping in mind, CASA can be a big challenge for many banks, but a bank which has all products available, raising your CASA number from current by 10% should not be difficult because of digitization, maybe cross-sell and various other initiatives. Is it possible that we improve our CASA number to improve our margin?
See, I don't think increasing this CASA percent of 40% will be possible, or will be very challenging, increasing this CASA share from 40%, because already see, only possibility I see, but not now, maybe towards the fag end of the year when substantial rate cut, 2-3 rate cuts are there, and difference between the saving fund or current account and term deposit comes down. And there are not many alternate opportunity in the market. Otherwise, increasing CASA share will be very challenging. That's why I'm giving a CASA guidance of 40%, around 40%. Because see, JIT is also coming. Because of JIT also, government is very conscious of their cost also. So they are coming out of the just in time only. At the time of need, they will release the funds. So that maintaining that will also be a challenge.
So what is your expected budget for digital footprint and digitization? New initiatives?
We have digital business of around 2.67 crore. We are expecting to increase it up to 4 lakh crore during the year.
Sir, my question was, we've been spending annually 1,000 to 1,500 crores, and if I recollect, 2 years back we had a 4,000 crore budget on digital roadmap for the entire bank. what is the current year budget on digital spend in new products, initiative, digitization, and various other things?
No, 4,000 was not there. Our expenditure is in the on digital and IT is in the range of 1,200 to 1,300 crore.
No,
So
what I
similar
meant,
budget we
4,000 was for 3 years. That is the time which I
3 year.
remember.
Okay. That means that's why around 1,300 per year. So similar budget we are maintaining 1,300 to 400 per year.
Sir, any idea how are we expanding our cross-sell business?
Cross selling.
Yes.
Yeah,
Insurance,
cross selling.
broking.
Yes. Cross selling. That's why I told we have RAC centers and resource acquisition center, and RNGR will be for the government only. But RAC are also doing for this cross selling, and our subsidiary which we have launched, IGSS. Through that we are increasing our cross sell footprint.
So thank you for answering all my questions and best wishes for the year to come.
Thank you.
Thank you, Sushilji. Next question will take from Dikshit Doshi. Dikshit, please unmute yourself.
Yeah, thanks for the opportunity. Firstly, you guided for 1.2% kind of ROA. Don't you think that the impact on the NIM will be offsetted by the treasury gain next year to some extent? If you can elaborate, what was the thought process behind reducing the ROA target from the current level?
No, see, absolute number profit will not come down. That I can assure you. But since assets will grow, there will be impact on the ROA. Coming to the treasury gain, so some of the treasury gain will be offset by the requirement under AS 15 also. If interest rate goes down, our requirement under AS 15 will go up. So part of that will be compensated there also. And as I told, treasury gain we will book as per our requirement only. We will not going for selling all the way, because see, this is not the only year when rate cut will be there. There will be other opportunity. So we will be very mindful of booking profit.
Okay. And second question is, our CAR is very healthy, more above 17%, and with 10 to 12% kind of a growth we are targeting. Is it fair to assume that this 5,000 crore of fundraising is just an enabling resolution?
You can say so, because last year also this approval was there, but we didn't require. And this year also, if we see, it is very healthy at 17.94% and CET at 15.36%. So may not be required, but we have kept enabling clause, because there is call option of around 4,000 crore of the bond. So if we see we can reduce cost, or there is some opportunity for raising some equity and we are getting good return, at a very competitive rate, then we can think of. So that we have kept for enabling, so that if some opportunity is there, we can use that.
Okay, that's it from my side. Thank you.
Thank you.
Thank you. Next question will take from Mona Khaitan. Mona, please unmute yourself. Mona, please unmute yourself. Ask your question. Mona, we can't hear you. We'll take next question from Ashok Ajmeraji. Ashok ji, please unmute yourself.
Yeah, good evening. Thanks for giving this opportunity. And sorry for having joined little late, because the SBI meeting went on for a longer period of time, and then there were some snacks, etc. So, sir, compliments to you, sir, for good set of numbers.
Thank you, Ajmeraji.
Sir, I have missed some of the questions and your answers also. So maybe it's sometime at the cost of repetition, if you may permit me. I would like to know little on the recovery side, that what are the prospects in 2026 for the recovery from the written off accounts and the overall recoveries. And secondly, now since the valuation of SRs issued by NARCL now is permitted, earlier you used to take a nil value, I mean 1 rupee value or totally provided for, but now it is permitted by RBI. So, what is the impact was there in the books in 2025 in the March, and what are the prospects going forward there into for FY26?
Recovery, thank you, Ajmera ji. Recovery, we have last year we have been able to achieve 7,651. Out
Yes,
of
sir.
that, recovery in a smaller account less than 1 crore is 6,730. We are giving guidance of recovery of 5,000 in the range of 5,500 to 6,500 for the next financial year. And AUC also we are giving maintaining the guidance of 2,000 crore. Last year also we have given guidance of 2,000 crore, but we could achieve 3,290. But we are giving guidance of 2,000 crore in the AUC book. Coming to the SR, we have not, we went with the conservative approach and we have not gone for the restoration or release of the provision in this financial year. Going forward, we will see if we need at all, then we will go. Otherwise, we may not opt for that. We will continue with the same approach.
Okay, sir. Taking it little forward, sir. What is our total write-off book totally? And when you say 2,000, what percentage of it comes? 2,500 or 3,000, whatever, which you expect to recover?
Yeah. See, my return of book is around 41,000 crore. So approximately 5% of that.
It's a very conservative, I think, estimate.
Last year also we have given guidance of 2,000, but we could overachieve that. Let us see.
Yeah. And sir, this our composition of loan book, the corporate and the retail is going to remain same, or you would start looking some good opportunity in the corporate sector also, even tweaking the ratio also.
See, endeavor will be to maintain the same 65 to 64,
35.
36 or 65, 35.
Yes,
But
sir.
we are already looking for the opportunity, and wherever we are getting good opportunity, we are according sanctions also. And recently also we have been in the Q4 itself. We have been able to accord sanction of around 38,000 crores. So we are already looking for. But endeavor will be to maintain this ratio 65-35.
65-35.
Yeah.
Am I audible, sir?
Yes, Ajmera ji.
Yeah. So, sir, my next question was on the treasury front only. That now going forward with all these changes taking place, and even the valuation norms have been changed by RBI for the AFS book profit, and we have a very healthy investment book. So going forward, I think I have heard part of your answer of your last question, that you are not that very optimistic to take the entire profit in the 1 year only, because there will be opportunity in the coming years too. But having said that, what will be the expectation of both the trading profit as well as the books from where we can realize the profit to the P&L credit to the P&L account, sir, in the treasury front?
Treasury front, as I told you, we will be, booking profit according to the, situation only. We will not go for the very aggressive booking, because I expect interest rate will, we are entering into regime of lower interest rate. So, of course, exact number I may not be able to give you, will pass you on. but treasury profit will definitely increase. Trading also, otherwise, and other income also definitely will increase because volatility is there in the forex side also. So some we are expecting some good trading profit that side also on forex book also. Even if you see the number of the Q4, we have booked a good gain in the forex trading. Exact number will pass it on to you.
No, it's okay, sir. Sir, what is the approach going to be for this Bhushan Steel and Power with that judgment of the court? You have any exposure? You had, I think, some exposure on that.
Yes, we had exposure on Bhushan.
Yeah.
So let us see how ultimately it pans out. Judgment has come. Whether the affected party go for the appeal or not, if they go for the appeal, so when ultimately we will have to, if at all, we have to reverse the transaction. But one thing I will like to share with you.
Yes, sir.
See, when the this resolution happened, we got a haircut of 60%. Only 40% was the recovery rate. Now that asset is up and running and in a good shape, and last 2-3 years, the steel sector is also doing good, and a lot of capacity creation has happened. Recently also, government has also taken action on the dumping side. So hopefully, net, I think it will be good for the banks. If at all we have to reverse and go for the.
So it's a blessing in disguise, eh? So you,
I mean,
so you do,
you
don't. You don't expect. Sir, one last question in this round. On the NBFC front and the co-lending front, when the RBI has also now a little bit relaxed the norm that you can lend for onward lending to NBFC, even for non-priority sector credit also by them. And also RBI is encouraging co-lending also. So what is our bank's approach and what is our co-lending book, if at all it is there? And how do you see the further lending to NBFC sector, sir?
No, further lending to NBFC will happen, but we will be very cautious in lending to NBFC. We will go further with the only good rated NBFC and having good track record. Number one. Number two, our exposure in co-lending is less than 500 crore, not much.
Okay.
So co-lending, why it has not picked up? It's not because of only primary or participative this thing. Because see, unless we have some reconciliation mechanism, we have issue. In past also, because of the reconciliation issue, we have not been able to onboard, go for the co-lending. So, and we are in the process of creating capacity, and as and when our IT infrastructure is ready, because reconciliation is the bigger issue. So, as and when we have a digital readiness, only then we will go for the co-lending.
Yeah, that is definitely required. Even a small bank like Bank of Maharashtra has developed the complete end-to-end solution for that. And unless you have that kind of capability, it is not advisable to go for that. I'm sure.
Yes.
I agree with you, sir. Yes. Sure, sir. Okay. Thank you very much, sir, and all the best.
Thank you, Ajmeraji.
26, and we'll meet again after the first quarter. Okay.
Sure.
Thank you, sir.
Thank you.
Thank you, Anand.
Thank you, sir. Any other participant has a question, please use the raise hand option and ask a question. Sir, we do not have any further questions. Jay, please unmute yourself and ask a question.
Hello, sir. Hi, good evening. Sir, question on your yields on advances. Right, so it looks like that the decline in yields on advances is much sharper relative to what policy action suggests. If you can provide some more color here.
The yield on advances, yes, declined by 28 basis point. Not any specific reason. Impact of the EBLR only. Because see, 50 basis point we already passed on. So, and my 40% is book is on the external benchmark.
Right.
Apart from that, just to add to that, I am just giving one example. We have seen huge rate cut in the WCDL loans. So it is impact of that only. WCDL loans, what is happening because of the surplus liquidity also, but this is after these numbers. So because of the surplus liquidity, they are going for CP and they are getting CP at much cheaper rate.
Right.
As
But sir,
compared to
I
whatever.
think we are anyway, growth conscious. I mean, profitability conscious in the sense we are not growing corporate too much. So I was a bit surprised that in the quarter there was only 25 basis point rate cut for 2 months only. And okay, so and we pass on the rate cut immediately, right? The 40% book maybe within a 2-3 yeah, okay.
Yeah, no, very next day.
Okay, sure. And secondly, sir, the MSME slippages, anything to understand what is, there was a rise in the slippages QOQ in the MSME. Anything to read into this? Because there are a lot of reports saying that, export-oriented MSME, they are having some little bit of a trouble.
No, MSME because of the, as I explained in my earlier opening remark, it is on account of the MOC, auditors audit of the branches. There are few accounts where auditors say stock is not, so they reduce DP from some back date. So because of that impact is there. But one thing I assure you, slippage number will be less than whatever we have achieved. That is for sure in MSME sector also and overall also.
And sir, if possible, can you share the SMA 0 plus 1 plus 2 number, including below 5 crores loan? I mean, if you have that number.
Yes. SMA 0 total is 23,255. SMA 1 is 14,843. And SMA 2 is 7,825. Total 45,923, and it is 8.06%.
Okay.
Total. Yeah.
Okay.
And more than 25 crores, we have only one account, and that is also because of the court order. But we have made 100% provision in that also.
Right. Okay. And lastly, sir, on gold loan, after that RBI seemingly tightness and we have a decent quantum of gold loan, how are you seeing that business shaping up in terms of growth and maybe the relative competitiveness by other banks or NBFC or gold financiers?
Yes, of course, there will be impact both on growth and income. But it is draft guidelines and we have given our feedback. Let us see how, in what shape the final guidelines comes. But if it comes as it is, yes, there will be some impact on both growth and earning also.
No, so sir, what kind of, why should there be any impact, sir? If you can elaborate, because other
see, first of all,
gold loan circular,
see, one example I am saying. They have told income producing whatever is there. So there should be hypothecation of that also. Earlier we used to take only gold loan and create chargeable, place the gold loan and we used to give. And if we are not able to produce the income criteria, then we have to classify it under retail or consumption loan. So consumption, LTV for the consumption is 75% and LTV for if it is classified under say agriculture is 90%. So there will be less quantum of loan, number one. Number two, part of the growth in the gold loan, that is not related to basically the circular. Gold was at peak, around 1 lakh crore. So maybe some moderation, some growth may impacted there also. And gold was also being classified as agriculture. So because of that, some income impact may be there.
Right. Understood, sir. Thank you very much, sir, and all the very best, sir.
Thank you, Jay.
Thank you, Jay. So I think we'll take that as a last question. With this, we come to the end of the post-results con call. So do you have any closing remarks to make?
No, I think all the questions has been, taken, and opening remark, I have taken all the things. 1 or 2 point, ROA also I have given guidance, and recovery number and slippage number we have given good number, and we will be able to achieve that. Slippages also, whatever we have achieved, it will be less than that. That is sure. And recovery through other channel, NCLT, I think we have kept a decent target of 800 crore for this year, and through NARCL also we have kept target of 250. And one more point. See, branch expansion, we will be going for some branch expansion in the area where we have less presence, like in western side. So we will go for some branch expansion also, because one branch we garner some good business in a year. So that will be the strategy for the next year also. Thank you. Thank you,
sir. Yeah. On behalf of the management and MK Global, we thank all the participants for joining so late. Happy evening and have a good day. Thank you, sir.
Thanks, Anand. Thanks to all the participants for sparing your time on holiday, I will say, and in late hours. Thank you.
Thank you, sir, for opportunity. Thank you.
Thank you.